Hello traders, welcome back to the channel in a new video tutorial. Today I'm going to be talking about Delta Volume Profile. This is a tool that I use mostly in my intraday short-term trading, but technically something you can even use on higher time frame charts if you want for more swing trading. But again, for me, the biggest edge with this is in my day trading. If you want to learn more in detail about all my strategies with it, you can definitely check out my day trading course with order flow and volume profile. This video, I'm just going to go over a brief overview of what Delta Profile is and what the components are, how you can set it up on a Sierra chart, and how you can use that in order to help you in your trading decisions and to interpret order flow and the market participant sentiment and what is going on in the current market environment. Okay, so let's start off here. This is Sierra chart, and again, you don't have to use Sierra chart for this. All you need is any platform that has these tools in its capabilities. At the moment, TradingView does not have these capabilities, so this is not applicable into TradingView yet. They don't have tick data, which is necessary for all this precise order flow trading, especially in the futures market, which is centralized. So we know that all the volume trading data comes from the CME. So first things first, let's define what delta is. So at the most basic, delta is the total aggressive market orders to buy minus all the aggressive market orders to sell. Now, what do we mean by aggressive market orders to buy and sell? Well, let me bring in here. This is just a screenshot that I found. Just ignore all this stuff right here, but this is just a very basic DOM or depth of market, where we have on the left we have the bid or the resting or passive limit orders to buy right here. This is the current price over here highlighted in yellow, and so you got all your resting limit orders to buy here down below, and it tells you the number of contracts that are waiting. This is all different types of participants, and this is just a cumulative of all the resting orders at each price level here. And then on the right side, we got the ask or the offer, as it's also known, which is basically passive limit orders to sell above price. So if market participants were just limit order traders that were passive, markets would simply not move because there's no one to get aggressive and try to lift the offer to the upside, and there's no one aggressive that is trying to get short and just hitting the bid to go down. When you have markets like the S&P 500 that are pretty thick and liquid, then we're going to have high numbers of contracts at every price level. Again, this varies. If you're trading extended hours, during the early morning hours in the US, for example, then you're going to have a lot less volumes than if you're, say, trading the open of the US session in the morning, for example, which you're going to get a lot more liquidity and orders coming in. Okay, but the way it works basically, then, if you're an aggressive trader and you want to get short, and we're right here at this price level, then you're going to have to hit the bid, meaning you're going to have to pay down one tick below in order to get filled right here so you can get short immediately. Same thing here. If you're an aggressive buyer and you want to get filled in to go long immediately, then you're going to pay up, and then you're going to get filled at the next available area or level in the ask side, where you're going to lift the offer at the next available level in order to get filled, and you're going to be long in this market. And this is how things work when you have aggressive buyers and sellers. There's constantly, in this case, let's say, buying aggressively, lifting the offer, and the more traders get in, then they're going to start consuming all these resting limit orders, or traders are also going to begin pulling their orders if they see that this is getting bullish, and then market is going to start pushing up. That's basically how all markets work, and it's a zero-sum game. For every buyer, there's a seller, meaning for every aggressive seller, there's going to be a passive limit buyer, and for every aggressive buyer, there's going to be a passive limit seller, okay? And so delta is going to be total executed orders to buy minus total executed orders to sell at each price level. Okay, so let's move this out of the way and let's go into a footprint chart quickly where we can go over an example of this. So this is a 1 minute chart, and right here we're going to talk about this this candlestick in specific that we have right here in the middle. You can see that we have a delta positive of 67 contracts in this whole candle. So how do we measure delta? Well, if we're going to measure delta at each price level, you can see that we have this candle had a range of basically 1 point, basically 4 ticks. So each one of these ticks is going to correspond to one price level. So you can see here, this candle, the low was at 41.90.50 and the high was at 41.91.25. So the way to calculate delta is at each price level, we just take, in this case, 49 executed contracts to buy. And remember, it's on the right hand side because we have to measure this diagonally. So that means that aggressive buyers had to hit the offer on the right side of the book in order to get filled. And so you can see right here, you have 49 executed orders to buy, 0 executed orders to sell. So that means at this price level of 41.91.25, we have a positive delta of 49. And same thing on all levels. Down here, 482 executed to buy minus 322 executed to sell, 160 positive delta, etc. Okay? Over here, this is negative. So we have 3 positive deltas here and 1 negative right at the bottom. And again, this makes sense because usually you're going to have sellers at the bottom and more buyers at the top in general, okay? And then if we take all these 4 deltas for each price level, we can get a total delta for the entire candle, which again is 67, okay? So this candle had a positive delta of 67, meaning there was more aggressive buyers than sellers in this 1 minute candle. And again, you can measure it also level by level, which is what we're going to be mostly talking about in this video. Okay, so let's go first. If we go quickly into a 5 minute chart, and we're going to come back to this later, but you can see this is how I have my charts set up pretty much every day for my intraday trading. I have each session, the extended hours and regular hours, I have its own volume profile. And on the left here, you can see all these green and red lines. This is going to be our delta volume profile. And what this is telling me is the executed orders to either buy or sell at this level and who was the winner, or meaning if we had more aggressive buyers or sellers at each level. And a little bit later on in the video, I'm going to go over how we can use that information in order to help us in our trading. Okay, so very quickly, this is going to be, again, specifically for Sierra chart, how you can apply your own delta volume profile. So I just go here to tools. I take my draw volume profile tool. Let's say I want to profile from this high up to the end of the chart. So now I have my profile. This is a volume-based profile, meaning this measures the total number of contracts executed at each price level. It doesn't matter if it's to buy or to sell. It's just adding up all total volume of contracts, and the more trading contracts at each level, the more extended this profile is going to be. In this case, we have our point of control right here, which means this was the point where we had the most executed activity, as you can see, which makes sense because you can see price spend a lot of time chopping in this area. Whereas if you look at the low volume node areas on the edges, these are areas of support resistance where price just rejected or went through very quickly. So how do we turn this profile from a total volume into a delta profile? Well, we're going to go into analysis studies. We're going to select profile and go to settings. And we have to make several adjustments here. First of all, we're going to go down, and here where it says bar calculating method, you can see it says total volume. We're going to go and select ask volume minus bid volume. Okay, so that basically means total executed orders to buy, meaning orders that lifted the offer or the ask, minus total executed orders to sell, meaning aggressive orders that hit the bid. So if I put apply, you can see that now it has turned into this gray lines right here. Now, second setting that we need to do is bid volume and ask volume coloring method is selected as none. We're going to put difference of bid and ask volume coloring. So that means it's going to color them based on the delta. Okay, you can see this is still gray. Now we need to go over here, draw outline when coloring. This you can leave at yes, but the problem with this setting is it's going to make an outline on each of these lines, and since you can see they're very, very thin, because each line represents one tick of price, then it makes it harder to see, and you might have to expand this chart a lot in order to see the colors properly. So I always select no on the outline here, apply. Okay, and now the last setting is we need to change the coloring. We go to subgraphs, and right here where we have bid volume and ask volume colors, you can see this is both are selected as gray, and that's why it looks like this. So the first one we're going to make red, and the next one we're going to make green. Why do we do this? Because obviously, like I said, if you're hitting the bid, that means you're aggressive sellers just looking to market short, so it's red. And if you're lifting the ask or the offer, you're aggressive buyers market longing, so you're green. And once I hit apply, there you have it. Now that is your delta volume profile. If you go back to settings and inputs, you can change, the width of this. If I go here, maximum volume bar width type, I like to select here window width. And then here, maximum width percentage, let's put it at 30 to make them a little shorter, maybe even shorter. Let's put them at 15. Okay, and if I click OK, you can see that now, instead of having a volume profile based on total volumes, what we have is the delta at each price level right here. So what this is telling me, for example, if we look at this delta right here, that you can see it's a big red line right here, that means that on this levels right here, we had a lot of aggressive sellers that were just market shorting right here, and we had a lot more sellers than buyers right here. But what do we notice here? Well, we can see that if we put in a profile, we would have a high volume node right here, and we can simply do that by changing this quickly from ask volume, bid volume. If I put total volume, you can see right here how we have our high volume node because price spent a lot of time sideways right here. So let's go back to the delta. So now what can we do with delta profile? What is it good for? Well, it's good for identifying absorption. Absorption is one of the most important things that I look for when I am doing my day trading, because absorption is showing us what areas are being defended by big players, meaning big passive traders or institutions, banks, hedge funds that have big orders to buy or sell, and they need liquidity from aggressive traders in order to fill their positions. So just by looking at this chart, you can see right here a big cluster of buying here. What does that tell me? That tells me that right here and right here, we had a lot of aggressive traders buying at market, thinking this was just going to go up. And in turn, you can see that market failed to have an hourly close through here. And then from there, we started pulling back over here. Okay. Same scenario in this point that I highlighted. You can see we came down here once, twice, 3 times, 4 times, 5 times, and you can see that especially in the first 3 occasions, we came back and market just refused to close and break down from this level. So once market starts pulling back, that means all this aggressive selling that happened here, it's underwater. Traders are getting squeezed, and they're most likely going to have to puke and close their positions and get liquidated. And this only adds the fuel into the buy side in order for this to reverse. Because remember, I mean, this is an hourly chart. So if you're looking at this whole range intraday, this is a very wide range if you're trading, you know, on a lower time frame. Okay, so that's the main use that I have for this. And you'll notice in general, when you have a volume profile, at the top of the profile, you tend to have more aggressive buyers because they're trying to predict a breakout, and you tend to have more aggressive sellers or more red deltas at the bottom because they're trying to sell a breakdown from this level. But as we've seen, you know, a lot of times is very costly if you're trying to predict a breakout, because you can get big absorptions at these areas and then just have this reverse against you. Okay. And then if we do have breakouts, then market will tend to do the opposite of what we had. So for example, if we have a profile here and price breaks down and we had big selling deltas here, once we pull back here from the opposite side, then we can expect some kind of rejection in this case. So And again, it's not a hard set rule of thumb that you're going to have red delta on top and green delta on the bottom. Sometimes, red delta on the bottom and green on top. Sometimes it could be the opposite, but then this tells us, the market sentiment, because if we have big green deltas at the bottom and price pulls and bounces, that means that aggressive buyers and limit buys are in sync and they're defending this level aggressively. Okay, so let's go into an intraday chart. Let's go into a 5-minute chart and just see, for example, how you can use this in your day trading. So here we have this profile. This is from the regular trading session from 9:30 to 4 p.m. on the US session of the stock market. You can see we had a very strong trend day up. And what can we see, for example, on this little profile here? Well, if you notice, you can see price broke out, and then we had this consolidation sideways here for almost about, 1, 2, 3, 4, 5, 6, 7, 8 by 5. For 40 minutes, we were holding this level down here. And if you look at the delta profile, you can see big aggressive selling delta here right at the lows. What does that tell me? That tells me that traders were trying to pick a top. They thought that this was the top and now this was going to be pulling back down. And what happened was there was big traders loading up on long orders here using all this negative order flow of aggressive selling in order to fill up their big limit buy orders. And then all these traders got pretty much squeezed to the upside, and they either got liquidated or they were forced to close at a loss or reverse their position and just add up fuel to the fire in order to keep pushing to the upside. You can see similar scenario here as well. Red delta here on these small pullbacks, and then we just kept squeezing. So this is very typical that you're going to see on big aggressive trend days. And then let me see what the last example I had here. Okay, so here's another example. In this case, we have aggressive buying at the top. So you can see right here, we have big red delta. And let me I'm going to hide the volume profile. And I'm just going to leave the delta profile right there. So you can see just the delta at each tick level. And what do we have here? We can see that we opened up here. This is 9:30 a.m. Eastern, the start of the US stock market hours. Futures market open RTH. And what do we see here? Very aggressive buying right at the top here. All positive delta here on all these price levels, meaning more aggressive buyers than sellers. And yet price failed to be able to close and break out, and we started breaking down here. So that means there was really big limit sell orders here that were getting filled with the aggression of the buyers. All the buyers got absorbed. We pushed down, and then once price pulls back here, then as you can see, this was defended heavily by sellers. So when we come back, we can expect the same sellers to still be defending this area. And you can see how here, as soon as we pull back into this green aggressive buying area that was absorbed, again, we rejected from this level and just started again trending down. Okay? Doesn't always happen like this, but this is one of the techniques that I use when I do my intraday trading. by using delta profile in order to look for absorption or areas of high volume interest. And then those are levels or areas that I'm going to be looking at closely when price goes back into them. Okay. And again, this is a very quick summary of the in-depth strategies that I use and that I teach in my trading courses. So definitely go check those out if you're interested to learn more. I hope this video has been very useful and helpful to everyone. And remember to subscribe so you don't miss out on any new content. And I will see you all in the next video. Take care.